picking up guard. Let's see what happens in the next 10 days as the budget is being announced, whether this will be a reality or not a reality. So we are taking steps in that direction. Prevent treaty abuse. Already steps have been taken. Mutual agreement procedures are there between countries. Exchange of information is happening. All this controversy around Switzerland. So with all these tax havens, India has built those tax networks. So no longer can someone just hide his wealth somewhere overseas without being under the radar. So that's also happening. And prevention of artificial avoidance of permanent establishment. Again, this is the guard concept. So how will all this pan out? The guard rules coming bets for an M&A professional, how will it pan out? The first thing is our due diligence will have to be more careful. Because as the laws evolve, there will be more controversies. So the judgment call will be very, very important. The second part of it is whenever we do overseas restructuring, we should be mindful of the CFC and all these thin cap rules. All those things will have to be kept in mind. The third and most important thing is, although GAR has been deferred with effect from April 1, 2017, set to take effect from April 1, 2017. Whatever step you take before that, say you do a restructuring before that, and if any benefit anyone's to you post April 1, 2017, because of that step, does it fall within the flow of GAR? So, for example, we do a merger now, create goodwill. You're very happy, you did an appointed date which is retrospective, you did a merger, you created goodwill. But the benefit of goodwill will anyone to you going forward for the next many years because of the tax legislation. So there are some parts of the GAR provisions which seem to indicate that in a step in the arrangement, when it happens before March 31st, you will be caught. So that's where the clarity is required. Otherwise, it will be a chaos. Something I did in 2010, if we get a benefit now, we will still be caught in the way it is. So that again is a wait and watch. Which means, as I started a conversation in this presentation, which means there's plenty to think about and chew on, and we'll never be out of business as tax authorities. With that, I would like to thank everyone for the patient hearing. Thank you very much.
Thank you, Vikram, for wonderful presentation. We had a lot of questions during this talk, but still, if you have any questions, I think one or two questions only. We don't have time.
Okay. Regarding transfer pricing, there is double taxation involved, nationally and internationally. Is something being done there and conflicting decisions 3 or 4 on transfer pricing that it should not be double taxed? So this is blatant double taxation.
So can you give me an example of what your...
It is disallowed in one country and added back in another country. Transfer pricing. They take artificial prices. So there is a double taxation involved.
Correct. But there is a credit mechanism also. So if you get foreign tax credit, there is a, depending on the laws of the country, you can take foreign tax credit for whatever taxes you pay in India. So if your tax both ways, you can get a credit for that. But that is again subject to limitation in that country.
Proportionate tax calculation is
but that will be dependent on the country's law. That particular country's law is scheme to take the credit.
The question here is that in the case of Indian company, there is an adjustment, transfer pricing adjustment. The question of credit does not arise according to me.
The issue is that now there is a disallowance in the Indian company's hand, but there is no benefit granted to the foreign company. So in that way, there is double taxation in different hands, and not in the same hand.
So what they try to get at is double non-taxation in the West. So they are happy with both are taxed. So that is a happy situation for both the governments. So that is unfortunate. That's going to happen because each country will want to seek to tax that particular transaction.
the amounts involved are very huge.
Correct. So for that you may want to go to APA authorities and get a ruling in advance for the transfer pricing.
There are conflicting decisions on this point.
Yeah. So that's the reason APA has been brought in. So you can actually go to them, present your case and say that, let's be fair to both the sides and come to a mid path rather than having taxation both ways.
Yeah, my question relating to BEPS only. Like these all e-commerce companies are based out of Singapore, like Amazon, TikTok, Flipkart and all that. So how do you think it will affect their operations? And moreover, like after BEPS coming, how the structuring? mostly overseas jurisdictions are taken for tax benefits and all that. So how it will affect India as well as other global countries? You know, there is a fight for capital among all the nations. So how it will overall affect the global economy?
So what will happen is, there are two ways. Let me break it up into two. One part is countries coming into India, inbound. And second is India going outbound, putting investments overseas. So companies coming into India, there obviously there is hardly any leeway left for tax planning, because as I just discussed, Mauritius is gone, Singapore is gone, and there are hardly any favorable treaties left. So all in all, you have to pay capital gains or any other taxes in India. So it's become more streamlined. Having said that, POEM, which was to come, the guidelines were still awaited. It takes effect from April 1, 2016. POEM guidelines have not yet come as of now. So debate is whether it will really come in or not come in, or whether it will be CFC or whatever. So there, the important point was POEM, place of effective management. Really, under the garb of saying that it's an overseas company, really is India calling the shots, sitting here in India. The directors here are calling the shots. So can be treated as a domestic company taxable for the worldwide income. So that is something which we will see a lot of law evolving around that. The second part is outbound, where India is putting in countries overseas. As I mentioned, CFC, Control Foreign Corporation Rules, may come. So you gone are the days where you can have passive company holding investments all across the globe, and all dividends come there as a cash box, and India doesn't repatriate anything. That is gone. Those days will be over now, because you have to have some substance in that Control Foreign Corporation. Otherwise, everything which you accumulate there will be taxed in India. So US, if you see Trump and all, they are looking at this particular situation where wealth is stashed away in Ireland under the garb of very exotic structures. How to bring that back into US? And for that is incentivize, saying that lower the rate of tax in US, concession tax for such situation. India also we might see this happening. Right?
Last question.
It's not a question, actually. My compliment to Vipul Bhai for very rightly predicting that he will not allow you to speak. And he didn't allow us to speak.
Thank you very much.
And I have an complaint also. That I am feeling so much of inferiority complex now. Because at the age where you should move around the trees along with some good looking filmy heroine, you don't actually analyze your High Court, Supreme Court decision. So I am starting to feel 25% now.
Pretend for us, you have to do it. And I'm not that young. Thanks, thank you, sir, for the kind words. Really appreciate it. Thank you.